Hey there, Thomas Wood here with MicroQuant, and today we're going to talk about another excellent trade opportunity we had in the futures trading room with crude oil, and actually several different entries that we pointed out throughout the day that all seemed to, or that all not seem to, but all worked out extremely well. The first one was we were looking at crude oil all the way up here at the top. We said, okay, we're in a channel. So we had resistance at the highs, we had support at the lows. So we were looking for a breakout. More specifically, we were looking for a bearish breakout due to a no return on our 240-minute price chart and a bearish divergence on our 30-minute price chart. So we had a bearish divergence plus a 240-minute no return plus a consolidation pattern. So we're saying, okay, we're looking to short on a break below 93.31. Now, here was your break below 93.31 right here on this bar. You sold off all the way down to the first profit target, which was an uptrend line here, and then you stalled. So that move right there was from 31 down to about 15. So you're talking about $150 a contract roughly. Not a bad trade. The second entry was on the break through said trend line. So your second entry was right about here at about 17, or if you got in a little bit late, at about 93.10. And that came all the way down to the next support level, which was right down here at 77. So another several $100 a contract trade there. Then the third entry we talked about was a head and shoulders pattern on the 500 tick right here. So you had a left shoulder, a head, and a right shoulder. And all of this is within the context of now what we call a bear flag or a golf club pattern that has now occurred on our 240s. So we're looking for further continuation to the downside. So you have the head and shoulders then. Your neckline break is going to be at 92.68. So you're selling at 92.68 with trender confirmation because you turned red on the trender, agreeing that it should continue to go down. And then that got you in at 68. Right now you can see you're down at 23 at the moment. So another $400 a contract or so to the downside there. All in all, if you held on to the original long, which I know several people in the trading room did, I personally did not. I exited and re-entered a couple times, but people in the trading room were holding it for the swing. They're in it from 93.31. They're up about $1,100 a contract right now, so working out really well. That's all I have for you for today. Hope it helps, and this is just an example, by the way, of the type of detail we go into in the trading room one. This is the setup, this is the signal. You enter on a break below here, you enter on a break above here. And we give you the directional bias, we give you the setups, why we think it's bullish or bearish, and then you can pull the trigger whenever you're ready on the breakthrough said price points. So make sure you click the link to subscribe. Don't forget to visit valuecharts.com to sign up for the futures trading room. And until next time, happy trading.